makes you confident in confirming your 2019 and 2020 targets? Good morning.
Hello, good morning. Well, thank you very much first for having me in your show. I must say, after having earned 1.6 billion in the first half year, we are of course very well on track to meet our 2.5 billion target for the year. We have to say this single quarter has been the best quarterly result for 4 years now. So we are very happy with the result, and obviously this is a very good base for the remainder of the year.
Can you tell us a little bit about what's going on with the reserves in the business, Christoph? Good morning. Well done on the numbers, by the way.
Well, thank you. Good morning. Yeah, reserves is always a very relevant topic for reinsurance, as you know. Our reserve level is absolutely stable, so on a very high and very conservative level. Despite this, we were able to release some of our reserves into the P&L already now in Q2. This was partly due to some transactions we were able to finalize. But on top of that, some parts of our core business have been turned out to be so profitable that it was adequate and necessary to release some of the conservatism into the P&L already now, which shows that all our underwriters really did make a great job in bringing that kind of profitable business into our books.
Christoph, we're informed that Munich Re was one of the reinsurers really on the hook for the Boeing debacle, and you've talked about how much you're going to pay out for that. Can you give us a sense of the numbers and whether it's going to have a big impact?
Yeah, first of all, for Boeing, we are very well reserved and we feel very comfortable with that. We are aware that currently there are some discussions continuing, and potentially there might be different liability covers, different liability discussions to go on in the future. Therefore, we will be very carefully follow these discussions and then re-discuss and recheck if our reserve position needs to be adapted or not. But this is more discussion for Q3. Currently, our reserve is around 120 million euro, and we are still fine with that.
Okay, and obviously there's accounting regulations around the timing of when you can take more reserves. Can I ask you, in terms of investment, you're releasing money from the reserves, that's to the shareholders. What is the depth of negative yielding bonds mean to your business in terms of the capital that you deploy to make a return on? Give me your take on negative bond yields, negative yields around the world.
Yeah, well, thank you. That's a very interesting and, of course, highly relevant question. The low interest rate environment is clearly a burden for us as an industry, and the reinvestment yields we are currently able to achieve clearly are reduced compared to where we were 10 years ago. So in this quarter, we were able to still achieve 2.2 percentage points as reinvestment yield, but obviously this has come down. We have to at the same time understand that this is more long-term effect. So over the next 5 to 10 years, clearly this will have an impact. On the short term, we will be able to compensate the lower yield very easily by the amount of good investments we have been taking in the past, and especially due to the fact that our duration in investments is very long. From a political perspective, of course, it's highly critical to have that low interest rates in major parts of Europe now and also some other geographies. So this is something I'd like to criticize very much.
So understood that you're planning ahead in terms of the low interest rate environment and negative yields, Christoph, because of course we could actually get more rate cuts from the ECB, and that would no doubt increase the challenge. In terms of planning ahead as well, what sort of planning ahead are you doing for an increase in natural disasters?
Well, we have been as a group very outspoken about climate change and the impact of climate change on the environment, but also on our claims experience. So we always have been a first mover, highlighting the negative effect on climate change. So we are very well aware of the fact. And in our underwriting guidelines and policies, we try to make sure as much as we can that the overall mix is a stable one and that we do not overproportionally underwrite natural catastrophe risk, and that we have a very good diversification. Therefore, we as a company feel very relaxed, and we are able to cope with that, also given the high amount of capital we are holding. And anyway, it's our core business, so we really are. I mean, that's why we are here. From a more global and general perspective, Of course, climate change is an issue. We all, and the whole global population, we have to work together to really tackle that.